is this a case where people are just moving in impulsively to these stay-at-home stocks? The Zoom video, well, Clorox is higher today, as you see there. Roku is higher, the Pelotons and so forth. Is this an impulsive move or a lasting one?
I think it's rates. I think it's more about rates. I think it's less about the Delta variant, more about rates. If you chart the 10-year yield over Zoom or DocuSign or Peloton, you get the same chart. They're all inversely correlated. So you have a second wind to a lot of these growth stocks when the 10-year yield sold off. That's simple, and I don't want to oversimplify it on a day where everyone is really having a tough time looking at their portfolio, Tyler. But I think it revolves around rates, not around the Delta virus.
And so for those of us who might need a refresher course in why rates are so critical to this class of high growth names, why is that?
So when rates are rising, you want to be a buyer of value. When rates are falling, you want to be a buyer of growth stocks. You don't buy growth stocks while rates are increasing. That is basically investing 101.
And that is because why? Because the earnings stream in a rising rate environment isn't worth as much as it is in a low rate environment.
Because you're paying for those future earnings because they're not earning money currently. So you're buying basically a depreciating asset.
Yeah.
So when you
go ahead, finish, please. I'm sorry.
So what I think was more concerning for the overall market was the fact that we had entered the pandemic in a deflationary environment, and I mentioned that with you about a month or so ago. That was more troubling to me. This is more troubling to me than anything else. I'm not worried about inflation. If you look at lumber prices, your previous guest, Steven, said the same thing. Look at where they peaked. Now they're off drastically. And they're not only off drastically because everyone says, well, they rallied so hard. They're actually lower than the pre-pandemic level as far as lumber prices. That says a lot. And that says a lot to me. Go back to June 2018. That was the taper tantrum. And that's where you see lumber prices are actually roughly 25% lower than where they were back then. So I do believe it is a transitory event. I do believe it hurts when you're trying to purchase gasoline and lumber and things like that. But I do believe that the transitory nature will have people scratching their head for a long time.
Steve, let's end this with a couple of specific recommendations then. What stocks do you think should perform well in the kind of environment you're describing?
So I do believe that you're going to get that value basket perform again because the valuations have dropped dramatically. The knee-jerk reaction to rates falling and everyone dumping that value basket. You know the names that I'm long. I'm long TSE, Trinseo. I'm long OLN. But I also believe on the other side, DocuSign is going to be successful in any environment. I don't know how you two have been with this, Kelly and Tyler, but DocuSign makes my life so much more easy. And regardless of whether I'm in the office, out of the office, on the West Coast or on the East Coast, I'm looking for a DocuSign sent to my email versus the archaic fashion before this. So I think that one will perform well as well.
Shepard Smith here. Thanks for watching CNBC on YouTube.